Good afternoon and welcome to today's CFO Lunchtime Live. I'm James Solomons and I'm delighted to be hosting today's discussion, which is brought to you today by the letter T, Technology, Taxation and Transformation, how to build a world-class finance function. As businesses continue to grapple with economic uncertainties and talent shortages in 2024, CFOs will continue to be sought after for their strategic guidance and financial expertise. Over recent years, we've witnessed a real growing reliance on CFOs from other C-suite executives and department heads who lean on their analytical prowess and financial acumen to make well-informed decisions for the benefit of the organization. As a result, many CFOs are turning to technology investments as a means to drive cost efficiencies, enhance data quality, and streamline processes across finance and the broader business operations. Essentially, the ability to automate while maintaining compliance, accuracy, and scalability is the value proposition that CFOs are actively pursuing when they're looking at these tech investments. However, the question remains, is this an unattainable ideal or a realistically achievable goal? To explore this question and delve deeper into the topic, we're joined online today by Cyril D'Souza, Global Head of Finance at Big Tin Can, Scott Wiltshire, VP and GM ANZ, Oracle NetSuite, and Krisha Tadiapelli, Tax Expert and Director of Sales at Avalara. Welcome, guys, and thanks for making the time to join us today.
Thanks for having us, James.
Yeah, pleasure.
Yeah, it's a pleasure to be on this panel, James.
Thanks, guys. We've got Krishna who's joining us from India today, and Cyril is joining us from Boston, the US, Scott from lowly North Ryde, and myself from Sydney as well. So it's truly another global lunchtime live here today. Certainly not lunchtime for two of the guys, but we'll assume it is. But enough from me. We're going to get into the questions. As always, this is a live discussion. So if you have a question or two you want to throw in, type it into the chat box. I'll try and weave it in as we go along. Otherwise, at the end, we should have some time for the Q&A. But to kick off, I'm going to start with you, Cyril. Can you tell me a little bit more about the current state of play for the finance function? What trends are you seeing at the moment?
Thanks, James. Yeah, I mean, there's a lot of things that are happening pretty much at the same time. I mean, the one thing that comes to mind is the CFOs or the financial executives within organizations are playing more than a role than just looking at the numbers. It's a more enhanced strategic role where we're partnering with the CEO, the COO, and the relevant C-suite to make sure that things are smooth as possible. So it's turning into quite a broad kind of skill set that's required, which kind of links to automation, where you need things as quickly as possible to make those really quick decisions at the appropriate time. Because some of the people that you're dealing with internally, especially in, it could be any organization, some of them are not, they're not driven off numbers. So we, as pretty much the head of finance and the leader within our organizations, need to interpret that as best as possible to make sure that stakeholders, well, within my area, such as engineering, customer care and marketing, are making those relevant decisions. The other thing I'd say that's becoming more and more important, obviously AI is one thing that we'll probably touch base later in this session, but it's also cloud-based accounting, and we've been having NetSuite now for quite a while, 2 or 3 years, which has really kind of propelled our business to see, to be more efficient in terms of our international teams, but also to get around the, in the old days, they used to do the updates and all of that. Everything now is quite live, so we don't have much disruption. So lots going on in terms of the landscape. The last thing also I'll note is the macroeconomic landscape with interest rates and inflation and all of that. So it's always good to take a pulse on what's going on, and obviously tailoring that to some of the risks within your specific organization.
Yeah, absolutely, and you're right. We will touch on a couple of those key points as we go along. Krishna, what are the trends you're seeing, particularly? We'll get into the Avalara piece a little bit more detail as we go along. But what are you seeing around the clients of Avalara and more generally?
Yeah, I echo with the thoughts of Cyril here. CFOs are no more kind of back tax office or a global back office kind of managers. So now they deserve a seat at the strategy table, and they are approaching in this direction. But I would want to touch upon three important trends which CFOs are currently looking with granular focus. One is about the tax compliance, especially whenever they want to go their footprint internationally. So post-COVID, the trend which is common across geographies is people have decided that there is no limitation to go global, so they can operate at scale, sitting in any part of the world in remote. But there is also a complication from a taxation perspective or even bookkeeping perspective, and etc. There are a bunch of routine tasks where people, especially the finance team, is spending a lot of time on. So just to give you a stat, in North America, the CFOs feel about 29% of their time is invested in managing tax compliance, about 38% in financial and planning analysis, and close to 30% on bookkeeping. So if we can really free up their time, that can be more invested in strategic initiatives, like Cyril was mentioning. And with benefits, there is also a kind of a threat which is also developing, which is cybersecurity. So an important trend which CFOs have to keep an eye on, and which I'm observing, where there is a lot of emphasis in boardrooms about cybersecurity, about maintaining the kind of security standards, followed by and without taking an eye on their international focus.
Yeah, absolutely. It's certainly that timing aspect. It's critical when you actually break it down. You don't realize how much time you spend on what could be termed BAU. Scott, thanks for joining us again, and sorry for the North Ryde pun. I grew up at Eastwood, so I'm very used to that area. Before. It is my hood. In terms of Christian just touched on it. The amount of time being spent on some of those tasks. Can you tell me more about the importance of automation to free up that time, particularly when it comes to selling and growing internationally? What are you seeing amongst the client base?
Yeah, well, I mean, automation is critically important. Obviously, the customers that I engage with on a daily basis are always talking about automation. I was reading before with Avalara's connector that they have the ability to support 12,000 jurisdictions. So, think about what you're going to do if you're growing internationally. How are you going to manage your compliance? How are you going to make sure that the data going into the system is accurate, that you're getting the right visibility, and you're presenting data to the business so they can make the right decisions, including the board, owners of the business. So it's absolutely critically important. We know something like 38% of the different jobs out there in Australia are in critical shortage. So we know we can't just throw people at it. So what do you do? Well, you need to automate, and bringing in NetSuite, a cloud-based ERP financial solution, connecting it with Avalara, which is built for NetSuite. Like I said, when you're working across, or you're scaling across international borders, you're talking multi-companies, multi-currency, multi-subsidiaries, you really need to focus on how I'm going to make sure we're compliant in all those jurisdictions, make sure we're fulfilling our obligations there, and the data that we're reporting, the dollars that we're reporting, really are available there for us to, take the opportunities or defend against the threats as you're doing that and scaling responsibly.
Yeah, absolutely. I mean, that's a lot of time, and talking certainly from experience, a lot of time can be spent even just in a couple of countries making sure you're on the right side of even just basic compliance. So Christian, on that, I mean, regulations are making the finance function a lot tougher. How does automation address these issues? What are some of the key benefits CFOs are achieving by embracing automation in their departments, particularly when it comes to automating tax and processes like invoicing and compliance?
Absolutely. I mean, I think Scott touched upon it, and so did Cyril. Um, the tax landscape is changing significantly. So I remember we discussed in our previous interactions where about the number of tax changes we are talking about. So with over
How many?
12,000 plus 12,000 plus jurisdictions only in US. So US and Canada put together in the year 2022, when we just stepped out of COVID and this businesses started opening, experienced about 260,000 plus tax changes. And these are rates and taxability updates. And on top of it, there is a trend which is picking up, especially in the US, from a US sales tax holiday, which regularly prevail for a period of 3 to 5 days. So the experience again in 2022 was about 122,000 plus tax holiday updates and changes which happened. So put together, we are talking about close to around 380,000 plus changes in a span of a year. That means we are talking about close to 1,000 changes on a day. It's humanly impossible to keep a track on if you are doing business only in US. Now we are talking global. So I've just touched upon the US, but when we really go a little bit towards the Europe, there are significant range, the tax changes in the VAT rates. Singapore moved from 7 to 8 to 9 in a span of 3 years. And now Estonia is picking up, is considering a tax change. Czech Republic is considering a tax change. So a company which is operating in 5 to 10 geographies, and we are just talking about the tax rate changes. And then on top of it, we have product taxability rules which will apply. And now we talk about the elephant in the room, which is definitely e-invoicing. So with over 60 plus countries starting it off, and you definitely need automation. Automation is no more a luxury. It's a basic need to run your business globally. And you need a solution that can really take along with your ERP. So just to mention the point with which Scott has mentioned about, see, Oracle, NetSuite, and Avalara, this is an 11-year strong relationship. And we are crystallized in such a way that we are addressing business needs at scale. So when you want to operate at scale, you definitely need automation, which is a key success factor for your growth.
Absolutely, that's right. It's coming back to that, allocation of scarce time, not even just allocation of scarce resources. So Cyril, I want to dive into the real life example from your experience, and we've had you on stage and on the lunchtime live before, and the big tin can story and the rapid rate of acquisitions, which you told us a few last month. That's slowed down, thankfully. I'm sure you're happy with that. But I mean, how is a solution like Avalara really relieving the burden of tax compliance for you? How many jurisdictions are you in? Can you give us some examples of automation, how it's helped you guys?
Yeah, so basically sales tax, it's driven by where there's a sales nexus. So where exactly do you pay tax and you need to remit tax? Now, we kind of stumbled across it, I'd say in 2019, 2020, because we predominantly started in Sydney and then we started to expand within the US. And when we started invoicing our customers within the US, we were actually doing things in a manual spreadsheet to start off with, and it was just too difficult. We're dealing with different states, local governments within the US, some in California, some in New York. And then basically what we did was we basically implemented Avalara into our Oracle NetSuite. And NetSuite, and basically the benefits you get are probably 5 things that come to mind. The first thing is it basically it allows you to do automatic calculations with your invoicing, as Krishna highlighted. So e-invoicing, it automatically calculates exactly what the physical address is that you have, and it can vary within a state. So within California, depending on the area that you're in, there's 200 different rates plus. And to me, for us to do it manually, it's error prone. So you're never going to get it right. The other thing that's brilliant with Avalara is the licenses as well. It does all the registrations for you within all the various areas that are there. It also does all the filing, such as sales and use tax for you on your behalf. And also, as we went down the path of acquisitions, the one thing is, because we didn't know the historical nature of what the companies were obviously transacting with, Avalara enables you to once you do the business license, it does the filing for you. Also picks up all the historical transactions. So then you're basically in accordance with the law within the US. So to us, the summary, James, is there's a lot of burden that's been taken off my shoulders initially when we started this process. It's literally within a minute or even less that the calculation automatically occurs. So you don't need to wait for anything. It all happens, and it's then stored within the Avalara system, and then all the filings are seamless. And we've to date, touch wood, we haven't had any issues with the authorities, and we will keep that proceeding. And the other thing is, as we expand into Europe, the same thing applies. You need expertise. If you're not going to use Avalara, you need to hire at least 2 or 3 external tax specialists, and it's just it costs from a cost perspective, it gets too high. So Avalara, the big tin can, has really served its purpose from that perspective.
Yeah, and as Scott said at the start, even particularly here in Australia, 38% of jobs lacking in having critical shortages. So it's hard enough in our own country to find things, let alone overseas. Krishna, on that sort of topic of the examples, can you just dive deep into that nexus? I think a lot of people might be confused, and it's not just where you're selling. Can often be a lot of little tricks that can catch you out. So do you want to give us a bit of a quick run through on that nexus concept, particularly in the US?
Yeah. So nexus as such, I mean, the word it defines is more of an arrangement. It's just more of an agreement where people get into consensus. So before talking about nexus, I just want to take you on a time travel a little bit before 2018. So how situations were. So prior to 2018, the similar kind of a global rules used to apply. You have a physical presence, you have a retail outlet, or you have an office opened in a particular state, then you are supposed to get yourself a sales tax registration. But the entire landscape changed on a remarkable judgment by the Supreme Court of the United States between Wayfair versus South Dakota. So Wayfair was selling a lot of their equipments into the South Dakota, and they were having trucks moving in, out, and etc. And South Dakota government demands that you're doing business in the state, and you need to get yourself a tax registration and file the returns, and etc. So when this entire discussion moved to the Supreme Court of the United States, a remarkable judgment was delivered in 2018 in the month of June. That's where they coined the word called nexus. And nexus, the common myth people have, especially when doing business in US, is just, nexus is just about the economic value of transactions which we're trying to do in any of the state. And the second myth which they would also consider is, I'm selling from a country out of US. Say, for example, I'm an Australian seller selling into the US, so that nexus rule doesn't really apply to me, which is wrong. Because the definition of remote seller doesn't mean you are a remote seller from the other state in the United States. It can be anyone selling into the state, whether it is the other state or even other country. So the remote seller definition is to be really read through with a very careful sense to understand, are you really hitting the nexus? And coming to the next point, which we talked about, the economic nexus. So people every time consider that it's only a value, which is like $100,000 or $150,000 in the kind of transaction value which they're doing into that state, but that's not even correct. So when at the start of nexus in 2018, states have considered both value and volume as 2 sub-parameters for economic nexus. So some states have taken value plus volume, Some states have taken value or volume, and some states have stuck to the point, like, we are very clear that we want to take only value, like Texas, which is $500,000, California, $500,000. So they're not really bothered about the number of transactions over there. And then there are different types of nexuses, not just economic nexus. The most important thing which we should keep a tab on is physical nexus. You have a remote employee or a remote worker operating in a particular state, you're triggering physical nexus. You are attending an event. So the similar kind of an event, which we had an on-stage physical event in Sydney last month. So if we have the same event in Texas, and me as a company attending that event, and I'm triggering sales tax physical nexus obligations, and I might be asked to register. And a hoarding in a particular state can trigger physical nexus. And on top of it, you have an affiliate marketing, which is rampant with retail business going global. So you are triggering affiliate nexus. You can trigger click-through nexus. And most importantly, even if you have shut down your business, you might be still asked to file returns for a period of 1 year. The state of Washington does it. It's called as trailing nexus. So
wow.
Nexus can hit you from any direction. So it's important to keep vigilant of your transaction and your business in the US. And it's something like the way we do our annual health checkup. It's highly recommended you also do your risk assessments on an annual basis to figure out where you have breached nexus and what is your next course of action to mitigate that risk.
Yeah, it's an absolute minefield, and we often all know about the IRS in the US, but I've heard that the local tax authorities can be a lot scarier than the IRS at the federal level. That's a great example. I'm sure there's plenty of literature on the Avalara website around that. Scott, I sort of turn a little bit more broader, but I think we're still sort of focusing on the tax and regulatory compliance. In the age of the remote work and collaboration, which a lot of finance teams are these days, I know Cyril certainly has a distributed team, as do we at XREF. How can tech facilitate that seamless communication, coordination between a global finance team, particularly then even touching on what Krishna was just talking about, the context of international tax and regulatory? How does that all come together?
Yeah, well, I mean, Cyril's a great example, sitting in the US and Europe last week with a distributed finance team. The most important thing is having access to live data that we're not being challenged on. What's the accuracy of this data? So which currency do you want to look at it? Let's roll it up, whether it's multi-company, multi-currency, multi-subsidiaries in multi-countries. That data needs to roll up. Choose the currency you want it to look at, and that facilitates some really productive conversations. But I'm sure we've all had the experience of the opposite of that, where you go into a meeting to discuss the strategy and what we're going to do with the money, and it degenerates into is this data accurate? Is this correct information? How come we can't get a real visibility into what things cost, or the performance of the business? So taking that away, that's the role of NetSuite, and automating your financial processes when you've got everyone sitting on the same platform. When the platform is able to take all of those multis and consolidate them in a live fashion, you can remove the conversation about is the data accurate and start talking about, okay, now what are we going to do? What decisions are we going to make from wherever you are? And we're on GoToMeeting, but we're also the remote, the applications that support remote collaboration and communication. They're amazing. We all had to adopt that very quickly over COVID. Really accelerated that, having cloud ERP to complement that, and having the Avalara Overtax, so the information that you're looking at is accurate up to the second. You can stop thinking about, like I said, the veracity, the quality of that data, and really make data-driven decisions that benefit your strategy and your business.
Yeah, absolutely. We lost you a little bit, but we got most of the audio. But certainly, it is amazing just how many CFOs and finance leaders do comment that question comes up, how accurate is that data? As a CFO, you've got to be able to stand behind that data, particularly when it is multi-region. I mean, Cyril, on your sort of specific experience with Big Tin Cam, and how has tech facilitated what you guys have been able to do? And as Scott said, you're in Europe last week. We thought you were going to be joining us from Europe today, fortunately for you a little bit earlier in the US in Boston. How has that allowed you to do what you've been able to do?
Yeah, I mean, the cloud base has just been revolutionary in terms of where you can be at any time, at any point in time. I think Scott highlighted a lot of the issues, good commentary in terms of what I was going to say. I think the one thing I will comment is I've got quite a dispersed team. I've got probably 8 in Sydney and pure finance, and I've got 7 that are in Boston. And what I like is the ability for them to, where someone finishes within Sydney, someone in Boston takes over. So it's that constant kind of 24/7 finance team that I've been working towards in the last few years. And I think it's critical now more so in remote working, because some of obviously the folks are working from home, but at any point in time they know exactly what the dashboards are showing, what the accounts receivable is, what the accounts payable is, and they're all working basically at efficient times all the way through. The other thing is the storage that you get of the data. So it's very important to, from an audit perspective as well, to hold as long as possible periods of data, especially if you go down an acquisition path and also within your own business to store. And that's the benefit that we've got from NetSuite to date. So from that perspective, I think it's been brilliant in terms of the collaborations to date.
Yeah, absolutely. Look, Cyril, I want to, we're talking very much about where we are today, or particularly where you are today, from a at the coalface perspective. I want to take a step back and look at your journey with the automation, with NetSuite underpinning it. And we discussed almost 2 years ago in a one-to-one on this forum around your journey. And what has been the journey so far? What were some of the challenges that you've faced that you've now been able to solve along the way with NetSuite and the like? I think that's really important for our viewers, because that for them might be where they're at. They'll pick a point and go, I'm at this point. How do I get to where Cyril is and where Big Tin Cam is at the moment? What's been the journey? What's been the challenges you've been able to solve?
Yeah, so I mean, initially we IPO'd in 2017, April 2017, and back then we're a very small team. We're probably around just under 50 employees. And then what we decided to do was, through obviously David Keane, the CEO, and the board, is expand internationally, both organically and through acquisitions, which came probably a year after that. And then to scale, what I discovered was the current ERP that we had wasn't basically fulfilling the requirements from the first thing that came to mind was revenue recognition. So we are a SaaS company. So therefore, we looked into various providers. And when I found NetSuite, it had a very good revenue module that actually we connected on the front end of the business. Which basically the order to cash just looked seamless, and that was one of the reasons why we took it on. The other reason was, Scott mentioned it earlier, was the multi-subsidiary and multi-currency. That's really important, because as you go down the path of growth and you add or you create entities, there's nothing better than just integrating it straight into your system. It makes the consolidation that you need to do. Everyone does a consolidation at the end of the month, midway through the month, or even early in the month, effectively. And I think the NetSuite, the way it's been set up, it's enabled my team to just implement, depending on where the entity is. It could be in Denmark, it could be in the UK, the US, to just smooth the transactions into the relevant modules in the subsidiaries, and then basically generate a consolidation that that doesn't take any time. So we no longer use Excel for things like that. So it was things like that that kind of gave me the insights into, yeah, and this is one area, this is one system that I think we can grow with. And then when you later discover its relationship with Avalara, its relationship with other players such as Solego, everything comes into play, and it kind of packages it all up to make your life, you know, as basically the leader of finance, to make those decisions with the rest of the C-suite more efficiently. So yeah, I mean, it's been evolving. I'm still learning as I go with NetSuite. But yeah, the connection that it has with Avalara, I can tell everyone on this call right now, it's been, it really will take a lot of your time off your plate, and it's just seamless. There's no, my team doesn't really get any technical issues. It's once it's implemented and integrated, basically, yeah, everything kind of gets done for you from a from a tax perspective. So it's good.
So on that point, Cyril, I mean, how that integration then, how does it improve their business performance overall? Obviously, you've got more time to make decisions. And anything else there that sort of helped to, be worth the investment?
Yeah, so I mean, definitely the integration between Avalara and NetSuite just frees you up to do more things. So in other words, whilst Avalara, the benefit also of Avalara is it gives you insights into where exactly your sales are. So you can actually measure on a monthly basis, okay, we're generating more sales in California than we are in New York versus, Virginia, for instance. So to me, it gives you that kind of benefit that you can kind of see. You don't need to do the detail. Basically the reports kind of give you that insight, and then you can make decisions in terms of, right, do we deploy more salespeople within those particular regions or not? Yeah, the partnership between NetSuite and Avalara has just made me kind of reduce my team by, say, two resources, which has enabled me, and those are more tax resources, which has then enabled me to really invest more into FP&A, which I think is pretty important to then take the real life data and make those really kind of budgetary decisions in terms of where the business should be investing and where it should, where it's making actual margin or not.
Yeah, absolutely. Christian, Cyril's just given us his example, a real life example. What are other clients sort of seeing? And I'm going to throw to you, Scott, for your view on this. And after Christian, what are your clients seeing as how that integration is improving business performance while keeping themselves compliant?
So I think the connector between Avalara and NetSuite, I mean, these are the exact words from one of the CFOs. He said, like, I can have a peaceful sleep at the night with your exact connector with NetSuite and Avalara, because while we take care of the kind of the tax part, which is the most crucial part of it. So NetSuite, on the other hand, takes care of, they do the equal lifting from the business performance perspective. So I completely echo with Cyril in this case, because CFOs, they need a lot of data crunching and they need dashboards at their fingertips to make instant decisions, whether it is to pivot the budgets or to take any strategic moves. And I think the combination, which is currently working between NetSuite and Avalara with our existing connectors, it's giving them a complete picture with a click. It's not just sales and use tax here, James. There is a lot to it. So any business which is operating in US, so they have a lot of exemption certificates depending upon their nature of the business, the nature of the transactions they perform. And also, if they are into some kind of a streaming business, they would need communications tax. And specific to the use tax and even excise, if they are having specific businesses like moving cigarettes or even petrochemicals and etc. So imagine a conglomerate who are trying to do multi-business, and if they need to have a separate ERP and a solution like Avalara, and then they need to plug in the data from multiple sources. It's again as good as we are talking about automation trying to free up the time of CFO, but it's not serving the purpose. So that's where the connector between Avalara and NetSuite gets into the play. So we have a connector supporting all of these products. And now, in the future, where ELR is coming up, which is the invoicing and live reporting. So there are countries demanding both your AR and AP, both of those invoices to be recorded. And what is the best way to do it, apart from the existing connector with NetSuite and Avalara? So the CFO is very clear on the data which he is getting, and it is a secure way of transacting the data. And the CFO is extremely happy. So then if both these C-suite is happy, then obviously the CEO is happy and the customers are happy. So it's 4 C's in one go with our connector.
Absolutely, absolutely. I mean, Scott, what's your take on it? Obviously, from the NetSuite side, I mean, where are clients seeing those integrations really helping to drive business performance?
Yeah, well, I mean, it's probably only one thing I'd add to what Krishna and Cyril have described there, and that's trust. It comes down to trust, really, and it starts with experience. But NetSuite's been in business for 25 years. We've got 38,000 customers on the same platform, same version of the software. Avalara's connector was first made available in 2007, but they've got 15 years of experience, 30,000 customers. There's a huge amount of experience in taking on these. We've got a huge population of customers using the system and getting value from it. So really, you want to, at the end of the day, you want to be able to trust the system to do the job, do it accurately. And with that, we're up to version 20 or something like that. So this is a very robust solution that's going to take those, as Krishna said, that take those fears away from keeping you up at night, and you get back to focusing on looking forward in your business and making strategic decisions, doing higher value tasks, rather than focusing on, oh my goodness, where are we going and how are we going to sort out our tax and compliance. The way we do it today.
Or responding to a letter from the Dakota State Tax Office as to why you haven't paid tax. Would you say then, Scott, that years of experience, the longevity of the partnership, is NetSuite's key advantage when it comes to tax management and tax compliance?
Look, yes, in every facet, why people choose NetSuite ahead of other ERPs, typically because, we were the first cloud company 25 years ago, started selling business applications, financial suite over the internet. It wasn't cloud. We didn't coin the term cloud until a long time after that. But there's 25 years of that. In Australia, it's something like 2003. We had our first customer join us in Australia. They're still on the platform today. Everyone's on the same version of the software, so it gets newer and newer each year. You don't get version locked. Now, these are the same sorts of scenarios as I described with Avalara. So, why people are choosing NetSuite ahead of our competition is because of that experience. But what practically does that mean? How do you take advantage of that experience? And the way we have packaged that up to take to market through our engagement model, we have something called Suite Success, where we basically take all those years of experience, and instead of turning up to clients and saying, tell me what you would like, describe the ERP of your dreams, and I'll start with a blank piece of paper, and we'll create a custom ERP for you. Now, we have done that in the past. That's kind of the old way. We do every system is customized to a degree. However, these days we're really deploying leading practices. We're packaging up that experience and saying to the clients, well, let's talk about your business, what industry, what sector you're in, what you're trying to achieve, and let's make sure that when we implement for you, you're getting the best in class processes, these leading processes. So when you go live on day one, all your dashboards work, all your reporting works, your connector with Avalara works. The data that you're putting through there can be trusted from day one, instead of having to build that and iterate over many years to get to a kind of a critical mass, or get back to square one where you've just departed. So you know, those are really the reasons why people are selecting NetSuite, and of course the multi-currency and multi-subsidiary functionality.
I think that's key. You know, I talk about it a lot. It's, you know, it's quite often someone, when they're looking at these big changes, and we're going to talk to you in a minute, Cyril, about, again, a bit more on your journey and the challenges and pitfalls. It's where to start. And, you know, there is a concept in tech adoption of the adoption innovation curve. You know, there's the innovators, the early adopters, early majority, late majority, and the laggards. And, you know, many in our community are really focusing on what have others done? What's the way forward? And the beauty of, you know, something like NetSuite, you know, when I used to work at Xero, it was leaning on the expertise of those that had gone before. So bringing, I think, that best practice of, yeah, you might be doing it this way. You know, the worst thing you could do in automation, I think everyone on this call would agree, the worst thing you can do is just try and automate your existing processes without taking the opportunity to review what you're doing and how you're doing it, and understanding where there could be inefficiencies. Automation isn't just automating your old crap way of doing things. It's about finding those efficiencies in where you could be saving time. So I think, Cyril, you know, you've certainly been digitally transforming your tech platforms. What have been the biggest challenges and pitfalls that you've been going through, and would you have done anything differently along the way?
Yeah, so I think the one thing that comes to mind is obviously things are moving really fast from a tech perspective. I would say it's training. Training's one thing that I feel if I was to go back, I would train more of my finance team in terms of the functionality of NetSuite. For instance, I mean, that's one of various systems that we've implemented, in addition to obviously Avalara and ADP and Solego and Salesforce and all these things. But I'd say training to me is the one thing that's critical, because sometimes you may have a champion that kind of leads the way, as we all probably have had, but then that champion may leave the organization, and then you kind of lose, you know, that 3 to 6 months worth of knowledge that you kind of, it's very hard to get back. But the benefit that I've had with Oracle is just you know, I've got a constant support package every month. So I deal with Roger, as you know, Scott. So everything from our perspective, you know, has been good. So I would say yeah. I mean, it's lack of training, but it's also the other thing is you got to have a clear roadmap when you do a tech digital transformation. You can't do things on the run. So I would recommend you do like a 3-year plan, and you got to think about where you are as so at the moment your headcount could be, let's just say, 100 people. But then if you look at your strategic plan, and let's just say you're going to be at 500 people, well, that introduces systems that you definitely will need when you get to that size. So you got to plan well in advance. I'll give like for HR, for instance, Workday. When you get to 500, that's the ultimate system to get to when you get to pretty much that number. So you've got to plan always in advance, and make sure that the board, for instance, who obviously funds a lot of this capital, is with you on the journey. And I've had a lot of support internally at Big Tin Can in terms of the journey of the business, in terms of the systems, and also very supportive CEO. So you need that as well, and you need buy-in within the organization, because you can't work in silos with the rest of the firm, and you need to make sure that there's value add for whatever systems you're adding that can contribute to output that can benefit the rest of the stakeholders. So that's the other thing I would say as well.
Yeah, it's an important part. You talk about that roadmap. You know, I think boards, the thing that they don't want to hear is you get to a bottleneck point, and then there's a conversation, or we need to find X dollars for an ERP upgrade or a HRIS upgrade. I think that roadmap, you know, having that mapped out and understanding where there might need to be, you know, still call it CapEx, that CapEx investment into new systems, I think no surprises, obviously, always for boards, but certainly they never want surprises from their finance team. But I would agree, you know, training is critical, and being able to get that in the hands of as many of the team as possible, because yes, many on the call would agree there's always generally a champion for a particular piece of tech, but you know, people do move on quite frequently. Krishna, you know, we're turning into our last 15 minutes, so we've got a couple more questions to go. I mean, what's next for Avalara in terms of its roadmap, what it's doing, what's on the horizon, where's AI fitting into its roadmap? You know, that's the big thing. Is AI going to help people with their tax compliance, or is it, you know, is that something that's way off into the future?
Definitely, I think, you know, AI is the buzzword across businesses globally. So there are on that note, and Avalara also launched a ChatGPT plugin way ahead once the ChatGPT just got introduced. So artificial intelligence has two-pronged effect here. One, I'll talk about more from an Avalara perspective, and the second one is more from a business and a government perspective as well. From an Avalara perspective, the kind of, you know, trade classifications, the product classifications, when people do a lot of goods movement across the borders. So the AI-enabled product classification is a game changer. So Avalara solutions are more or less like built based on AI and ML, where you throw in your description, you get the accurate tax code, the HS code for your product. And that, coupled with our research product, will also give you the kind of, you know, the taxability and the non-taxability of the product in the region where you're operating. And on top of this, so we are, as a company, we are heavily focused and in bringing the ELR to all of our customers. So currently we are serving about 30,000 plus, and now we are expanding big time across geographies. So we also have people now in Australia on the ground, so to address the Australian market and be close to the customer is the kind of a motto we are developing at Avalara. So with the e-invoicing and live reporting, like I mentioned, there are two kinds of boards. One is PIPAL and non-PIPAL board. Some countries have adopted, like the Australia, Japan, New Zealand are more into the PIPAL, and Italy, Spain, and Poland are more of a non-PIPAL kind of countries. So we are working in close quarters with governments, and these kinds of the e-invoicing boards, both as a thought leader and also as a technology leader from a taxation perspective, to bring more business-friendly solutions so that the companies and the organization doing cross-border transactions and doing business globally are enabled, and they can have a swift movement from being a non-compliant business to a compliant business. While there is a lot of things happening at Avalara, so governments are not going to slow down on the pace with AI. So governments have picked up the pace big time. And so the news is governments in US are using AI to detect non-compliance and tax frauds. So having said that, if there is a company who is not really looking at their own kind of an activity, so don't worry, the government has got its own AI algorithm, so where they're going to track you down and they're going to shoot a notice. And obviously, that's a point where we also want to work with our customers and our future businesses, wherein in trying to help them be compliant. So I just want to leave with one statement here for all of the CFOs and the leaders who are currently on this call. Please understand the cost of non-compliance is way, way higher than the cost of compliance. So that's the essence, I would say. That's the bottom line what AI is going to give.
I was leaving pause for effect, Krishna, because it is quite important. You know, it's like anything. You know, if you think of it a different way, investing in an Avalara is an insurance policy to a degree against getting that notice in the mail and having to deal with it, because, you know, we talked about it in our face-to-face last month. You know, it's very much an expensive process, and if you miss some of those amnesties for those holidays, and you know, there's very little chance of getting out of having to pay tax and the fines that come along with it. So a great point to finish on that. Scott, you know, from the bigger picture, you know, how does that financial automation help organization stay resilient in these market conditions, and improve its profitability, and really sort of then at the same time continue to try and stay ahead of its competition in what is currently now, whilst the economic conditions are quite tough, you know, the leaders are moving ahead quite fast. So it's a real battle to play. How is this automation helping businesses do this?
That's right. Yeah, I mean, particularly in Australia, I think businesses are particularly resilient. You know, we're used to having the challenge of distance from everywhere else in the world, that, you know, and even the distance inside Australia and dealing with that. But supply chain, you know, the disruptions in supply chain have been, you know, pretty unpredictable. Things like COVID, things like tsunamis, things like, you know, what was it, the Suez Canal getting blocked, chip shortages, you know, being able to, it was, I mean, maybe we can predict some of these to a degree, but typically, you know, businesses are just, you know, dealing with these macro and micro challenges on a daily basis. And what do we do about that? How does automation help provide that flexibility, so you can, you know, have a buffer against some of the threats or weather the bad conditions, but also give you that agility and that decision-making power, so you can take advantage of opportunities as you see them, as they come up quickly. And obviously that's what automation is really about. It's about growing despite all those challenges, doing it in an accurate way, being able to rely on the data, make great decisions. But, you know, more practically, you know, what does that look like? Well, if your business can invoice and collect really quickly, you know, compared to your competitors, if you have visibility to your cash flow, and you can manage your cash flow better, more accurately, easier, you can free up your teams to focus on, okay, well, the idea here is, rather than talk about, you know, how do we get more of our money collected and in ready like it's there, let's automate a lot of that. Now, how are we going to deploy that capital for the greatest effect? How are we going to challenge the plans, you know, that we have for our business, or achieve the plans and beyond? Now, like we've discussed in the last hour, you know, automation is key. You just can't throw enough people at them. It's too costly. It's cost prohibitive to start with if you could find the people, but you certainly don't want to do it that way. You want to be working, you know, on your business, not necessarily in your business. Don't worry about your back office, your IT side of things. Let's automate as much of that as possible and free up your employees to really, you know, take the challenge to the market, innovate, create amazing products and services, and get them out and collect as quickly as possible.
Yeah, I couldn't agree more. I think a key thing you said in there was around that identifying opportunities. And if we're all spending our time focusing on just being compliant and getting figures to the board and to management, we're not seeing opportunities. You know, risk management, obviously, from a you know, even in the tax side, you know, spending time on risk management is important, but also risk management is important for identifying opportunities. And I think if, you know, that automation piece frees up that time to be spending you know, time, resources on where can we seize opportunities. That's how we stay ahead of our competitors.
Absolutely. I might just add something to that. You know, during the last, all these interest rate rises, obviously the access to capital really tightened. So there wasn't as many private equity or venture capital business out there lending, and they certainly, investors weren't looking for top line ahead of everything. They were looking at the fundamentals of a business and saying, okay, well, I really need to be sensible with this money and I need the right return. So how am I going to do that? Well, I'm going to be far more discerning than I have been in investing in businesses. I want to see really healthy businesses growing at a top line organically, also through acquisition, but I also want to see, you know, really good profit bottom line results to show that this business is a mature business. The processes and controls in place, they're managing that business well. And you can't do that if you're run, out of Excel, and you're error prone, and you're just dealing with the challenges of being more of a manual workplace.
Yeah, absolutely. Couldn't agree more. Cyril, my last question to you before I have a final question for the panel today. What keeps you up at night at the moment, aside from appearing on CFO Lunchtime Lives from the other side of the world in the middle of the night? What's keeping you awake?
Well, apart from my 4-year-old daughter, who's always up, I would say, there's to Scott's point. I think the switch in our company has been purely just focused on top line. We're now focused on EBITDA, so we're focused on growing that bottom line. And obviously, we're ASX listed, and we've guided to the market in terms of where we want to be at the end of June. And my job is to make sure that those forecasts and projections are on track. Obviously, I've just looked at the February results, and just making sure that everything is kind of there, balancing top line, bottom line, making sure that we're there. And I think it's about changing the behaviors within the organization as well, in terms so everyone goes for the journey in terms of this is the focus. And I think when Big Tin Can, for instance, does come out with some really sound kind of bottom line results, it kind of demonstrates that it's a disciplined type of business to what we were before. So, and I think it's a very important thing that the size that we are now, with all the acquisitions that we've done, that's what kind of keeps me up at night. That making sure that the business is ticking that box, making sure that it is on track. And making sure that if it does deviate from that, well, then we've got to mitigate, and we've got to have a plan in place to make sure that we do get back on track. Because there's nothing better than building a sustainable long-term business. We all go through different life cycles, and it's about making sure that you don't go the moment you see there's issues. You can counter them and make sure that you're just slowly, sustainably growing over time, because more opportunities will arise as you do expand. So that's kind of the one thing, and it also links to cash management as well, which kind of links to EBITDA management as well. So those are the two things, James, that keeps me up.
Yeah, absolutely. It's certainly. And I agree with yourself, Scott, and Cyril touched on it there. Those fundamentals are key moving forward. It has been another excellent discussion, and we've once again covered a lot of ground, as we always do. So I have a final question for the panel. It's the same question to all of you. We haven't really touched too much today on the employee side of change, but certainly whenever you bring in changes, getting your employees on board as you automate your company, you've got to have them singing from the same hymn sheet, as we say. First, you, Krishna, any tips on getting employees on board as you go through an automation process like we've been discussing today?
So I think the enablement is a key piece here. So whenever we are trying to get, and it's important, any technology solution we are trying to adopt into a company, the end user comfortability is going to be the crucial part of it. So at a leadership level, we'll be convinced about the automation, we'll be convinced about the benefits we are going to get. And there is an element of assurance we need to offer to the employees, because of one reason. There is a myth circulating across the globe, like an AI is going to eat away my job. But people are not really understanding AI is going to enable you to be better at your job. So I think it's a mind shift we need to do. So that's the point of assurance and enablement. I would think these two are crucial aspects in adopting technology and bringing employees in this journey together.
Absolutely. Couldn't agree more. Scott, your thoughts on getting employees on board?
I would say adopt the leading practices. So figure out why choose the right partners and adopt their leading practices. If it works for the industry as a whole, why doesn't it work for you? And the benefits there are that, in the NetSuite example, it's going to work out straight out of the box. You're going to get all those reports and functionality. But not only that, your training, your enablement for your staff is already built. You don't have to build that from scratch. So you can take advantage of that. Obviously, the economies of scale there, so it's going to be a lot cheaper. Don't underinvest in that change management piece, because no matter how great the tool is, if your users are pushing back and not wanting to get on board, you know, garbage in, garbage out. So yeah, put some thought into it, but you know, partner with the right people that can help you.
Absolutely. And Cyril, final word to you. Certainly, as you said, you were describing your team earlier. You've got a lot of people in your team now. You've made acquisitions. I mean, how have you been able to get employees on board as you continue and will continue to go through your automation journey?
Well, I basically am enhancing their professional careers as well. So that to me is very important. I'm bringing them on the journey as we grow together and partner with the right partners, such as Avalara, Oracle, and some other systems that we've got in place. So it's very important they buy in to the journey, and you are very upfront in terms of where you're going, especially from a 3-year perspective. So then they can also contribute in terms of inputs, in terms of where we should be, and you'll be surprised at what ideas they do come up with. So yeah, that's my perspective.
Fantastic, and that does bring us to the end of today's Lunchtime Live. Again, sincere thanks to our panelists, Cyril, Krishna, and Scott. Thanks to all of you for sharing your thoughts and experiences with us today.
Pleasure. Thank you.
Thanks for having us.
Thanks also to Avalara for their support with today's event. Thanks to everyone who's tuned in today from around Australia and New Zealand. A full copy of the recording and it will be made available later this afternoon and emailed to you. I encourage you to have a rewatch with your teams. One of the key messages certainly right at the end there is get your teams involved, help them understand the automation journey. It's certainly an important aspect and it'll free up them to do their best work. As I always say, it's about letting technology do the heavy lifting. But until next time, I am James Solomons and I look forward to seeing you on the next CFO Magazine Lunchtime Live. Enjoy the rest of your day.